Next up, we have Brad Rogers, who's Managing Director and CEO of Jupiter Mines. Brad joined Jupiter on August 1st after 14 years at BIS Industries. He was CEO of BIS for the last 7 years, having previously held senior roles there, including CFO, Director of Corporate Development and Head of Commercial. Prior to BIS, Brad was General Manager Corporate Development at GRD Limited. He's a chartered accountant with over 20 years' experience in the mining industry around the world, including Africa. Please welcome Brad. Thank you.
Well, thanks, Catherine, and thank you all for joining, and thank you to the Honourable Deputy Minister and also to Roger Baxter. Happy to have the opportunity to join this South African-focused panel because, as you'll hear, Jupiter is actually already a really successful South African mining story, and that's in part due to the great support we've had to date, both from the Government of South Africa and from the Minerals Council, and also from our many valued partners and investors in South Africa. So Jupiter already today is actually the largest manganese-focused miner listed on the ASX, and incidentally it's the largest ASX-listed miner in South Africa. We are that way because of our ownership of the fantastic asset Tshipi, which is located in the Northern Cape of South Africa. As you'll see in a moment, Tshipi is one of the world's premier manganese assets in the world's premier manganese district. Manganese is predominantly used today in the manufacturing of steel. It's irreplaceable in that application, and it's also not very well recycled, which is nice because it means the world's going to need much more manganese going forward. The use of manganese in steel has a robust outlook for the next 20 years, and what I'll explain to you is that manganese is also a really growing mineral in the future, and particularly in the next 20 years and even the next 5 to 10 years in electric vehicle batteries. So I'll show you that in a moment, and that will be part of our overall growth backdrop. Jupiter has a number of growth opportunities, both at Tshipi itself, as I'll explain to you, with respect to volume and efficiency opportunities, but also with respect to growth beyond Tshipi. And Tshipi, as I said, is located in the world's premier manganese mining district, where 32% of the world's manganese is mined today, making South Africa the largest producer of manganese in the world by some length, but also 80% of the world's reserves are located there. So that's Jupiter today. As I mentioned, we're the largest manganese miner on the ASX. We have a market cap of just under $400 million, which is a little bit under our net assets today. Cash in hand of $75 million as at our last annual reporting date, which was the end of February on a South African reporting timeline, and no debt. You'll also see there at the bottom of the page that Jupiter enjoys a very strong board and a refreshed board. A number of those board members, including our chairman Ian Murray and myself and Scott Winter, have joined quite recently as part of a board refresh that occurred at Jupiter, and we have joined in order to grow the company. The company is also backed by some really strong strategic investors, as I'll show you in a moment, and a number of those are represented on this slide here as directors. So Jupiter, as I mentioned, owns 49.9% of the Tshipi manganese mine, and we co-own that mine with Bentley Holdings, who are our Black Empowerment partner, and I'll explain them a little bit more in a moment, and also OM Holdings, who are one of the world's leading manganese traders who are invested at the asset level along with ourselves and Bentley Holdings. You can see on the right-hand side of the page there our top shareholders at the Jupiter level, and noteworthy is that Bentley, our Black Empowerment partner at an asset level in Tshipi, are also our largest shareholder at Jupiter, followed by AMCI and POSCO, and then a mixture of institutional and retail shareholders. So I'll spend a few slides talking about Tshipi, and the first point to make is that this is a fantastic asset. It's a long life asset, it's a low cost asset, and that means it's been profitable and highly cash generative through the cycle. Part of that is the cost efficiency and the resource endowment that Tshipi enjoys. Part of it, as I'll show you again in a moment, and you can see it here on this slide, is how well the asset is operated. It's had very stable production over the last 4 years that I can show you there, averaging 3.5 million tonnes per annum over that duration, and very efficient costs. I'll show you a cost curve in a moment which shows where Tshipi sits on the worldwide curve of producers, but it's at the lower end, and you can see there that it's had a reducing cost trend in its production over that same period of time. And that's all meant that, notwithstanding manganese prices have weakened over that 4-year period of time, and as you can see in our latest financial year was underneath the 4-year average shown there, because it is such a good operation, because it is so efficiently run with stable production, it's been significantly cash generative and positive EBITDA throughout that entire period of time, so much so that it's been able to deal with some elevated costs caused by the last few years of COVID disruptions and other things going on in the world, including, for example, elevated dry bulk shipping rates that have occurred in FY22. Notwithstanding a confluence of lower manganese prices and higher shipping costs, both of which are beyond the control of the company, this business, Tshipi and Jupiter through its ownership, have produced very significant positive earnings and cash flow. The other point to make there is that CapEx is very low. This is a very well-established mine. It has first-class infrastructure. It's got a dedicated rail loop with more capacity than we're utilising, and it's a relatively new mine as well. And as a result of all of that good investment and well-placed investment, the CapEx is super low. As you can see there, maintenance CapEx has been around 6 million, 8 million dollars Aussie, and this is all 100% Tshipi level. We're not expecting any major CapEx in the near-term future in addition to that. And all of that has enabled Jupiter to produce very significant cash flow, and in the last 4 years, that's meant that we have paid out very significant dividends, notwithstanding, as you've seen before, the manganese price was actually coming off during that period of time, which is why naturally the dividends have been a bit lower as well. Because it's a great asset that is well run, the cash flow that I showed you a moment ago and the low CapEx has meant, notwithstanding that, the company has paid much higher than average dividends out, average of 14% dividend yield over the last 4 years. And another way of looking at that is shown on the page there. The company has paid 84% of its market cap out in dividends over the past 4 years. Notwithstanding, as I'll show you in a moment, Tshipi actually has 100 years of mine life remaining, actually a bit over 100 years. So we think that that is a really good demonstration of the stability and the cash generation of this asset. So as I mentioned before, Tshipi is absolutely one of the world's best manganese mines. It's the 4th largest manganese mine by production in the world. It's got a 100-year mine life remaining, a bit over, but we're rounding it down to 100 years for the sake of the presentation, and it's one of the lowest cost mines in the world as well. It's set up well. It's got first-class infrastructure. It's got dedicated rail access, its own rail loop, relatively simple processing, crushing, screening, and then DSO shipping of the material. And we've got headroom on that rail loadout, as I mentioned before. 3.5 million tonnes per annum on that stable basis for the last 4 years of production, but we've got 5 million tonnes per annum of capacity through that train loadout. I'll show you a bit more of a detailed map of the Kalahari manganese field in a moment, but you can see in macro, hopefully, where that is located there, and that really is manganese heartland, not just in South Africa, but globally. The Kalahari manganese field contains, as I said before, 80% of the world's reserves, 32% of the world's production, and it's actually, again, as I'll show you in a moment, located in a really tight stretch of land, and Tshipi is part of that tight stretch of land. We go out via rail to a number of different ports in South Africa, and also we road rail some volume across into Namibia. We also road train, truck some material all the way out to all of those ports, and that volume is trucked above what we can get on rail. Tshipi's well run, and I say non-stop because it has been non-stop. In 10 years of operation, since operations commenced at Tshipi, that mine has never stopped. It's never stopped for lack of power, for protest, for strike, for any civil disruption reason. So I know that there's sometimes concerns about operating in South Africa, we can point to the scoreboard and say that this mine has operated without stopping. Part of that is it's got its own dedicated power, but it's also managed to be well run and to be very successful continuously in that period of time. You can see there from a safety perspective, and I always think safety is a really good marker of operations and risk management. Tshipi benchmarks really well, and shown there is the site's TRIFR. Benchmarks well against the best miners in the world, and Tshipi has a better record than most of those listed there. The company's had 0 fatalities since starting, and as I mentioned, 0 mining disruptions in 10 years. The company is also empowered through its partnership through St Bentley Holdings, who are one of South Africa's, I think, most respected and certainly most successful black empowerment companies. St Bentley invested into Tshipi at the outset. They have done a great job on the ground, and they've been a fantastic partner for us. Because they are invested in Tshipi and have been over the threshold from the start, Tshipi is also benefiting from the once empowered, always empowered finding. So just briefly on manganese, I mentioned before there are more markets that I'm showing you here, but we don't have enough time to go into all the many uses of manganese, and there certainly are many. The predominant use of manganese today is in the production of steel. You can't make steel without manganese. It's essential, it's not replaceable, and as I said before, it doesn't recycle very well easily. The recycling process causes loss of manganese. Depending which numbers you look at, steel and its many uses of steel and specialty alloys and all the rest of it use up between 90 and 95% of manganese production today. Shown at the bottom there is the use of manganese in lithium-ion batteries today, and it's a pretty small fraction of the overall manganese use, but that's going to grow rapidly, as I'll explain to you in a moment. These two markets you can view separately and together if you like. Steel over the next 20 years, according to McKinsey, is going to see a steady, gradual increase of about 0.5 to 0.6 CAGR over the next 20 years. So it's a predominant use of manganese. It will be there over that period of time. Manganese into lithium-ion batteries are going to grow much more rapidly than that. Depending whose numbers you look at, it's going to grow between 5 times and 10 times that 2% today. You need to beneficiate that manganese in order to get it into batteries by producing high-purity manganese sulfate. And for that reason, this demand is coming, and it's becoming because the predominant chemistry into EV batteries beyond 2025 is going to be NMC chemistries of batteries. The M stands for manganese, and that is going to grow the demand for manganese metal. So we sit here with two exciting, both growing opportunities that provide a backdrop for Jupiter's own growth opportunities. Steel, where we already have a leading incumbent position and a low-cost mine, is going to grow, and there are great opportunities for us to consolidate our market share off already a large market share from our single mine in that way, as well as margin enhancement opportunities. And then there will be new volume at higher margin coming from the EV battery space. Tshipi, fourth largest mine in the world, 6% of world's production at its current 3.5 million tonne per annum production rate. As I said, the mine can produce more than that, and it's got a 100-year mine life. So we're already sitting on the fourth largest production in the world. And as you can see there, I've taken all the names out, but that is the 62 manganese mines in the world that Crew tracks, and Tshipi's at the lower end of that. So again, what you have in bulk mining terms is a very efficient mine with very significant production and a very long mine life, and that presents an opportunity to consolidate around that key asset going forward. I said I'd come back to the Kalahari manganese field. So on the left there, you can see a blow up of the Kalahari manganese field. There's actually a 33-kilometre stretch top to bottom there. So our mine's right down the bottom, Tshipi. Up the top is MN48. That stretch contains 80% of the world's manganese reserves that are economically mineable, 4 of the 6 top manganese mines in the world, and Tshipi is one of those. So consolidating in the Kalahari manganese field is an opportunity, we think, and it's the right place to be for the reasons that I've just explained. Before you get to that, I've called M&A there are other opportunities in the progression of growth opportunities there. Starting from Tshipi itself, lower shipping costs, lower power costs, some plant and grade optimisation opportunities, so that's even before we get off-site. scale more production out of the mine, and we've got the capacity to do that. Rail is obviously an opportunity. That's a cheaper way to get out, and we're currently trucking some ore, which is able to be done because we've got low-cost mining. We think that there is a good opportunity to consolidate through acquisition, and the place to do that is in South Africa, and we're very positive about investing further in South Africa because we've had such a great experience so far. And then diversification into EV batteries through potentially downstream processing is an opportunity there. It's an opportunity that's a few years away. The explosion in demand for manganese is forecast to start occurring really in a few years' time, 2025, 2026. But that's certainly an opportunity, and that opportunity will be new volume at higher margins. Briefly on Jupiter's share price, I won't spend too much time because I'm already over time, but you can see there a bit of a disconnect that currently exists between the manganese price, which obviously is a key value driver for our company and its earnings, and the Jupiter share price. So the manganese price was at its 4-year low in November 2019. The Jupiter share price is around 4-year lows right now. Back in 2019, our price was 27 cents. Right now it's about 20 cents. So just in summary, and sorry I've raced through that, but this presentation is available on our website, and I'm happy to answer questions or talk to anyone separately. Jupiter's a fantastic company already. It's successfully operated and paid great dividends off the back of very good cash flows in the last 4 years since listing. Tshipi is one of the world's best mines in the world. That's why in manganese, that's why we've been able to do that. Tshipi has a long, long runway in front of it. It has opportunities to expand and become more efficient. There are also opportunities because of a very good market backdrop over the next 20 years. Steel will have steady growth. We're already in that, and we plan to drive consolidation opportunities there. And then there's new volume, higher margin opportunities coming because manganese, little known to some people, is actually going to be a burgeoning battery material as well. So you've got 2 really good growth strategy opportunities there. And on top of that, we've got opportunities to grow volume and margin at the site itself. 1 minute 30 over, that's a bit of a record for me. So I'll leave it there. Thank you. Thanks, Catherine.